This is Terms of Reference podcast number 154.
An aid agency, an official development aid agency would say something like, I don't want to put my money into a commercial structure because I'm just subsidizing the fat cats. Then you have the lenders like IFC and EBRD who are trying to price their loans or their equity commercially, and they don't want aid agencies galloping into the same deal and offering soft capital and messing up the market.
This is Terms of Reference. I'm your host, Stephen Laddick. For as long as I have been a social sector professional, there's always been a desire from individuals and institutions to do more partnering with the private sector. And by that, I mean traditional for-profit or commercial enterprises like Coke or Toyota or Airbus. In fact, 14 years ago, the capstone project of my master's degree at American University was, and I'm not kidding, the role of the private sector in conflict resolution. My point here is that this is not a new topic by any stretch. No matter how you'd like to approach it, the reason why we don't see more traditional investment in parts of the world where it's necessary to send aid or development assistance can be boiled down into one word: risk. Money, or more specifically, the individuals who control money, large and small amounts alike, do not like to place that money at risk of being lost. Unfortunately, the places where social sector actors choose to align their sights for action can readily be characterized along a scale of increasing risk. But here's the thing. The money, again, the individuals who control the money, are also constantly on the lookout for new opportunities that offer potentially high rates of return. And, funny enough, you guessed it, the places where those of us in the social sector live and work are also places that offer tremendous potential markets and high return opportunities. So what's an investor to do? Luckily, my guest for the 154th Terms of Reference podcast is Joan Larrea. Joan is the CEO of Convergence, an institution that connects, educates, and supports investors to execute blended finance transactions that increase private sector investment in emerging markets. Joan has 20 years of experience in emerging markets investing. She led the U.S. Overseas Private Investment Corporation, that's OPIC. She led their efforts to partner with philanthropic and private investors. She was a managing director on the emerging markets team at the Global Environment Fund, and she began her career as an investment officer at the International Finance Corporation. This episode is a fantastic conversation about how Convergence is attempting to breathe life into investments that would otherwise be too risky for the traditional private sector. We not only discuss the three ways in which Convergence works, but we also touch on several of the deals they've helped bring to life. We also talk about the reason why this type of investing can be so difficult for everyone involved and where that trepidation comes from. I spoke with Joan in Washington, D.C. But before we get started, here's a word from our sponsor.
The Terms of Reference podcast is sponsored by International Solutions Group, helping to improve the social impact of governments, UN agencies, NGOs, and companies for more than 10 years. Visit ISG online at www.theisg.com.
Hello, Joan. Thank you so much for being on the Terms of Reference podcast today.
Hi, Stephen. How are you doing?
I'm well, thank you. Where do we find you sitting today?
You find me sitting in Washington, D.C., where it's absolutely beautiful. Although most of my team, the guys who actually do all the work, are up in Toronto this morning. That's where our headquarters is. I'm the lone man in Washington at the moment.
I'm an old DC hen myself. Is it cherry blossom time or have I missed that?
Our poor trees are confused because they sort of began blooming in January and got walloped, and now I'm making a second run at it. So the tourists look confused, the trees look confused. I'm not quite sure what's happening out there.
That is, I guess, that's global warming, right? I guess that's what we call that. Joan, you are the CEO of an organization called Convergence. And rather than me even attempting to butcher what it is that you do, why don't we just start off with you giving us an explanation about what it is that you do and how you do it?
Okay, so hopefully I won't stumble over this. So we're an institution based in Toronto, Canada, and we connect, educate, and support investors, specifically investors who are trying to do blended finance transactions that increase private sector investment in emerging markets. And that's a mouthful, but to break it down, blended finance transactions, maybe I ought to define that for you just sort of as a basis. It's not rocket science. All it is when you are trying to put together a transaction that has some element of catalytic capital or catalytic support, risk taking, something that will attract private sector money, private sector investors who otherwise would look at the opportunity and say, it's just too risky for the return, or I simply cannot, operate in that country. So the idea is minimal amounts, and smart structuring of soft capital to get the hard capital to the table. And why are we doing all this? It's because we are attempting to help meet the sustainable development goals set out by, all the members of the United Nations a couple of years back. And there's just no way to get there if you keep using concessional money as pure aid all the time. And, there's just not enough growth of official development assistance. There's not enough growth in philanthropic funding. So there ought to be greater emphasis on using some of that money to really attract the vast amounts of private sector capital that is out there into things that actually hit on those goals. And those goals, they're about education, they're about health, they're about access to finance. And there's about 17 of them. We won't go through them. But so that's what we do. We're out there trying to help people do deals that otherwise wouldn't exist in nature by connecting, educating, and supporting all the various parties in those deals.
So break it down for me. There are three pieces of jargon that you put on the table there right off the bat. There's catalytic capital, soft capital, and hard capital. And, maybe for some of the novices or, people who are not super savvy on international finance, what do those three pieces of jargon mean? And let's just create a level playing field.
Yeah, and it's not like you pull out your wallet and you've got those three flavors of currency, right? Catalytic capital or concessional capital or aid money or grant money all kind of belong in one category. So this is money that is not looking for a return, perhaps not any return at all, or perhaps will take a low return, because it is out there trying to achieve a public objective. So if you imagine what a USAID does when they give a grant to an institution who is, inoculating people for polio. Or if you think about a charitable institution like a Rockefeller Foundation who's trying to support something, that's concessional capital, that's catalytic capital, that's soft capital. Hard capital is, Citibank's money, a Braj capital, any private investor who just is looking at a risk return profile, in a standard way. These institutions normally don't work together, right? I mean, if you're a hard investor in the emerging markets, you're looking for high IRRs, rates of return to do risky things that potentially will make you a lot of money. And you normally don't bump into the aid guys, the philanthropic guys, right? So the magic here is in trying to pull some of these parties together to get things done that are attractive for the private sector. They want to be there. They want to put their money to work because the other money's at the table. Does that make sense?
So are you able to satisfy both those needs? Like if you have an ODA assistance or like a philanthropic thing from Bill and Melinda Gates or something, that isn't seeking a return, but then on the same side you've got Citi or somebody like that who is, seeking that 7 or 10 or 30% return. Are you able to bring both of those sides together and satisfy both of those needs at the same time?
Well, we're not the ones doing the deals. So coming back to what we do, we are introducing, connecting, educating, and supporting these guys, right? So one of the reasons we were set up is the question came up, why aren't more of these transactions happening?
That's actually a much better question to start with.
Yeah, because maybe the answer to your question is, you can't do it, right? You can't accomplish this. This is a silly idea. The aid guys should stay in their corner and the Coca-Cola should stay in their corner. What was discovered in the research that came before Convergence was set up was that it's really difficult to put these deals together in a way that makes sense for everybody. So frankly, if you can go do something on your own, you ought to. But if you see a way to really leverage each other, you ought to get together. So it's not that we are advocating everybody do blended finance. There's only very specific situations in which it does work. So, but anyhow, the research that set us up showed that the reason more of these deals don't happen is because it's really expensive to do all this. There's a high risk attached, a high risk of a deal not coming off at the end. So that adds, to the risk of taking on the transaction. Nobody seems to know about each other's experiences. There's no repository of information where people can turn and say, oh, wow, this has been done before. There are no examples out there. So these are the kinds of things that led to the establishment of Convergence. And everything we do three things at Convergence, and every one of them hits on trying to solve for those problems. So long answer to your question, but yeah, there's a lot of activity happening out there, but a lot of sensation among people doing it that they're the only ones, or that theirs is the first of a kind, or wow, this is hard to do. And the whole thing we're trying to do is lower deal friction, make it a whole bunch easier for people to figure out how to put their deals together and find each other. Sorry, that was one of the other things that came out of the market research is deal sourcing is very spotty, right? There are deals who need capital. The capital can't find the deals. Nobody knows each other. If you walk into a big private equity firm, they'll say, oh, we have great networks. And if you walk into a major development institution like an IFC, they'll say, we know everybody. But the truth is that nobody knows everybody. There are huge blind spots in everybody's networks. And so we're also trying to do that. So again, we're connecting, educating, and supporting all the folks out there who are actually doing the deals.
You mentioned research there a bunch of times. And the question I want to ask is what was the genesis for doing that research, or what was the genesis for putting Convergence together? Was it, is it a for-profit entity and it's a for-profit venture that, people see this as a market opportunity and therefore let's put it together and do that? Or was there some other impetus behind the research that then resulted in Convergence? Or basically, how did this get started?
That's a great question, because I get to thank some people who really need thanking for taking a flyer on us, really. So we were established as part of the Addis Ababa Action Agenda. This was a big meeting at which it was decided that there needed to be a significant increase in, for, among other things, private sector push. And we were announced with great fanfare at the World Economic Forum thereafter. But the people who really stepped forward were, first of all, Citi Foundation and Global Affairs Canada, which is the Canadian Ministry for Foreign Affairs, Trade, and Foreign Assistance. They, and primarily Global Affairs Canada, bankrolled a study or a lot of work that was done to incubate and launch us and do the market research for us. That was done by Dahlberg and Global Development Incubator. So when I came on board, when we were formally launched, there had already been many months of talking to investors, talking to aid agencies, talking to charitable foundations, getting them to coalesce around this idea. There'd been an awful lot of research around what should the offerings be? And we're not for profit. We're actually a nonprofit corporation, but we're independent from any of our funders. I mean, obviously they care what we do, but
sure.
A lot actually. But we are able to operate very quickly and very fluidly because we're standing on our own corporate platform. So there are three things we do at this point. Maybe I should mention them really quickly.
Yes, please.
Okay. So the first is we're trying to support deals that are really in a proof of concept or feasibility stage, very, very early stage concepts for structures that are blended finance structures. So we have a pool of money from Global Affairs Canada that flows right through us, but we make the decisions about where to place it. And every quarter, we review all the applications we've gotten, and we select on a competitive basis. What we're selecting for is not, gosh, we like this company. We want to invest in this company. We don't invest in companies. What we're selecting for is, did this team come up with a concept that is outsized, that could really, really hit scale, that could really break open an old development problem, that could really bring private sector capital in a meaningful way into a major issue, right? So we're always asking, is this a big problem they're solving for? Will they be potentially getting us to scale if we help them along?
Is there something you could put on the table now, like a specific deal? I don't know if you're able to talk about deals that are out there right now, but could you give us a specific example?
Sure. We've already made, we're about to announce our, sixth one today, but we've made already several grants. And they're really broad. So one is one that I think you're probably interested in. It was a development impact bond concept for job training, education, and language training for Syrian refugees who are spilling out, not to Europe, but spilling out into the immediate areas around Syria, so Turkey and so on, Jordan, wherever. And so this is a development impact bond is a very, it's it's kind of a hard construct to explain in a snapshot, but it's a structure in which private sector capital fronts the cost of doing a social objective, and then the social objective gets executed by a bunch of implementing agencies. And if they hit their targets or overachieve their targets, either a government or charitable institutions step forward and pay based on performance. And so the private sector guys in the first place get rewarded or get paid back depending on how well the project unrolled. In theory, what it does is it alleviates pressure on the balance sheet of the government or the aid agency because the private sector stepped forward first. It also allows them to only pay once the results are achieved, and if it's well designed, they're paying less for the same outcome. So in this case, COAS Invest is designing a development impact bond that will help train and essentially train in entrepreneurship and train for employment people who are being displaced by the Syrian conflict. That's one example. Another really cool one, the one we're announcing today, is called Africa Green Co. This is a really ambitious idea. A group who's trying to solve for, what is the development problem? The development problem is that in many countries that are under-electrified, you've got hundreds of millions of people out there on the planet who still lack electricity. I think, don't quote me, but I think about 600 million in Africa alone. So why aren't people building power plants? Why isn't the private sector galloping in, building a power plant, having an offtake contract on their 20-year asset and raking in the money, and everybody feels good and the lights go on? Why isn't it happening? Well, in many, many countries, the utility that would buy the power is not creditworthy. So nobody wants to build a 20-year asset when you don't know if you'll ever get paid consistently. And you end up in these really complicated arrangements with political risk insurance and backstops, or the private sector party says, I'm going to charge an outrageous tariff for my electricity because I don't know, if I'll ever get paid twice. So then the people at the end of the chain trying to turn on their lights in their houses are paying an outrageous amount for electricity, and that doesn't work either. So that's why it doesn't happen. Is creditworthy off-takers sometimes are not there. So this grant to this group, Africa Green Co., is going to allow them to work on becoming an intermediary in the power market. So they're actually going to be a participant in the Southern African power pool. They've got status with a set of nations where they are going to be able to buy and sell power. That's the key, buy and sell. This is something that exists in all developed markets, intermediaries trading power. So this group, they can be a creditworthy buyer of power because they aren't relying on turning around selling it to the same one party, but they have a set of parties they can sell to. And they can, if one party doesn't buy from them on schedule, they can immediately contractually reroute the electricity. You're not actually physically rerouting, but you're saying, okay, I'm going to sell it to this party instead. And so within the power pool, you can switch contractual arrangements to adjust for things. And then they also have the status to go back and deal with the contractual problem. This sort of thing takes, as you can imagine, quite a serious balance sheet. And it takes agreeing with many sovereign nations that you're going to be treated in a certain way. It takes contractual integrity so that contracts can be switched on a dime, that you've got buy and sell or power offtake and power sales agreements that match. It takes a lot of specialization. The cool thing about them is that they're basing this whole concept on something that was done in India, where they also had a problem with creditworthiness of individual states of India. So they ramped up the difficulty because they're not in one country with several states. They're in a region with several countries. So they have received funding from us and also Rockefeller Foundation at this point. And we really wish them well and intend to put whatever support we can offer behind them, because this is solving for a big problem. It would really be important if it works. And by the way, on each of these grant awards, we write about the experience as they execute on the grant program, and then we publish. So that's a second thing we do is put information out to the public about deals and transactions and structures, whether they've worked or not.
Those are two great stories. I really appreciate it. So let's dial back a little bit. You told us about how you find the deals. So what are the other two pieces of convergence that you wanted to tell us about?
So the two other things. So those are just picking and choosing a very few things where our small amount of grant money can really catalyze things at the front end. The second thing we do is operate at the other end of a deal cycle where it is quite well baked and it is at the moment of fundraising. So I'm speaking about blended finance transactions that have an anchor investor who might be a grant-making institution saying, I want to see commercial parties step into the structure, or it might be a commercial anchor investor saying, yeah, I'm on board, but it doesn't quite work commercially. Let's go see who else is out there. So these are structures that need visibility because they are at the moment of looking for capital. And what we have for them is, joking here, but a bit of a Match.com for deals and sophisticated investors who understand blended finance.
I think Match.com has proven to be a worthy service for many people around the world.
Well, that's a good point. But in the research for Convergence, we found that the people who did the work found that there were a lot of experiments of this type that don't work. So we've attempted to learn from those experiences. So we call this our investment network. And again, you can see it on our website. Essentially, learning from what hasn't worked before. Many matchmaking platforms end up with a lot of stuff in there that's, been in there forever and that doesn't get cleaned out, a little bit like your closet, or maybe not your closet, Stephen. You probably have a perfect closet, but you know what happens.
I have 3 kids. I do not have perfect closets.
Yeah, so you get the lacrosse stuff in the back and the baseball. Yeah. So a lot of these sites become graveyards for deals that don't get taken care of, or maybe have long since expired. You don't have sometimes a comfort level that the deals are solid and that the investors on the platform are your kind of people. So we're trying to create a bit more of a club atmosphere. So every deal, and we're launching this today. So you've picked a wonderful day to talk to me. Isn't that nice? We're turning on the lights today. We've got a few deals to show and they're going to keep coming. So every transaction on the site, it could be a fund, it could be a project, it could be a company seeking a capital increase. It just has to be blended finance. That's the only theme. Any sector goes, but the deals have to be of at least a $5 million size. They don't have to be raising $5 million that day, but they have to be of that scale, because that's another thing that we found on other sites is very small things don't seem to move, and we're trying to address development at scale. So that's number one. They have to be $5 million total scale or more. Secondly, they have to have at least one anchor investor, typically an outside party who's issued a letter of commitment or a letter of intent, or in some conditional way said, I like this deal. That way, Joan and her crew don't have to decide that it's a good deal. There's been some independent market ping by somebody saying, yeah, I like this deal. That way, we know every deal on our site has legs in some manner. That solves for another problem with a lot of these matchmaking sites. Third, it has to obviously be an emerging market. New Jersey has, lovely things about it, but we're not operating in New Jersey. We're only in frontier and emerging markets. So that's that. So deals on our site all have a consistent quality to them. And then the investors on our site all have to be institutional investors, whatever the definition is in their respective domicile of a sophisticated investor. So in the U.S., it would be the SEC rules around institutional investors. If you come at us as an investor from Germany, we'll ask you a series of questions that are very German in specific. And so every investor on our site has been checked to make sure that they know what they're getting into and they understand, the kinds of deals that might be on the site. So that's that. We're going to go live today. We've got deals in there already that are funds, that are companies, that are projects. They're in health, education, ag, renewables. So even though we're just starting off today, I'm pretty positive about the crop. We also have over 100 registered institutions as part of the network. And that's important. You need to get enough flow of both investors and transactions to see any kind of, matches happen at all. We hope this is very useful for people. We're going to curate it very heavily. We're going to make sure that we know every deal on the site and every investor on the site. And we're going to learn as we go. So that's the second thing we do is for mature deals, we have that offering. We're not putting any money of our own in. We're simply trying to intermediate.
So I was, what I was just going to ask you, and I'm glad you used the word curate there at the end of what you're talking about. How big's your team? I'm looking at your site and it looks like there's only 9-10 of you here. Do you have enough people to actually, handhold and give the care and feeding that every single deal needs to be able to sort of walk it through the whole thing? Or how does that work?
You're right. So we have a team of, I think we're 9 at this point. And we have a managing director of the investment network, and he will have several investment associates under him. And we can't obviously handhold every deal that goes through, but not every deal needs it. But there are some deals that are really compelling, and you might want to spend extra time with them. But we talk to every single deal sponsor before they put their deal on the site. We run into them a lot because we're not just a matchmaking service. We're also, the third area of what we do is we're cultivating a community. So we bump into COAS Invest. We bump into all, cross-boundary about whom we've written a case study. We bump into Africa Greenco all the time because we're putting on events. They are participating in events, and we're, so we'll get to the third thing we do in a moment, but we know these people because our entire team of 10 is in this all the time, even though they're not all dedicated to the investment network.
So the question I really want to ask, and I apologize if this seems a little out of line or out of place here, but it's 2017, and it's just I'm finding it hard to believe that convergence hasn't been thought of yet. So but you're really putting it out there and saying that this is a blue ocean. This is something new. There's no other vehicles out there that do this specific kind of matchmaking or deal making or have a specific kind of network that they do. Or do I have that right?
Good question. First of all, we try to collaborate with others who look similar to us. So we have, similar to us in one way or another, right? So we have an agreement with Emerging Markets Private Equity Association because they have a lot of funds who are impact funds or otherwise end up being blended. We keep connections with global, the GIN, right? The Global Impact Investing Network. I believe they also have a site, but it caters specifically to impact transactions. I don't think they are emerging markets only. We have a nice relationship with Tonic, which is historically catering more toward high net worth individuals. But they too have a way of sharing deals amongst themselves and co-investing. So we're not a unicorn. We're not the only people out there bringing parties together, but we're the only people out there doing it for blended finance specifically. So we don't do infrastructure only or impact only. Now, if you think about it, what kinds of transactions in the emerging markets need blended finance? Sometimes it's every transaction in a really difficult place, like, a place just coming out of conflict or just coming out of a disaster like Ebola. But most of the time, it's sectors that are really just tough sectors. So education, health, some infrastructure, SMEs, agriculture, climate and conservation plays. These are the things that sometimes don't work immediately in pure commercial mode or need some kind of collaboration. So we span a lot of stuff that is handled individually by other parties, and our connecting theme is blending finance. So why didn't we exist before? I think it's because the words blended finance weren't being used, and so blended finance deals were happening in a scattered manner without anybody actually recording it. In fact, the third element of what we do is actually to build a body of practice around blending, right?
Let's move on to the community building then. Why don't you take us into that third area that you work in? Sure.
So again, we're trying to be a place where people can turn when they're trying to do their transactions and learn from what's already there. So we're not positioning ourselves as the smartest people in the room. We're positioning ourselves as people who know the smartest people, who are potentially more experienced people in the room. So we have a repository, actually database, that looks rather like our investment network live deals database, but it's for closed deals. These are deals that we had no hand in, but we noticed from public source information. And we've very systematically gone through and seen if they were blended finance or not. And if they met our tests, we collected whatever information we could about them. So you can actually, if you're a member of our investment network and you're doing a transaction, you can go to our closed deal database, which has probably over 200 data points at this point, and sort by country. If I want to be in whatever, Rwanda, or if I want to know about deals in agriculture, if I want to know which institutions pop up most frequently in transactions of this nature, you can sort all of this stuff in our database. And those are just individual, and you can drill down to an individual deal or pull back up and look by sector or by region or whatever you'd like to do. There's no other place where that data has ever been collected. So it should be useful. It isn't definitive. It's not like we've captured the entire universe of blended finance deals. There's always going to be something out there we haven't heard of. But it's indicative, right? You can see, there's not a lot of activity in this sector. Or wow, this country has had a lot of blended finance activity, and it's all been done by, pick one, FMO. So it's an indicative database that should be useful. We also write more in-depth case studies. So if we see a transaction we thought was really interesting and could really illuminate a subject for other people trying to do deals, we'll write a 5-pager pithy description of it. There'll be a picture of the structure. There'll be a description of what the commercial parties were going for. What kinds of returns were they expected? What was their, investment horizon? If there's aid money or philanthropic money in there, what was it trying to do? What was the development outcome it was seeking? And why did it go into this deal instead of just doing a straightforward grant? What went wrong? How long did it take? What went right? What would you do differently the next time? So we interview everybody who's involved in the deal, and we put this together. We've done this on several companies at this point, including very recently, we wrote one about a Seychelles debt swap for nature deal that was done by the Nature Conservancy, which was a terribly cool deal. They essentially proposed to the government of Seychelles to buy back their sovereign debt from the Paris Club at a discount. They created a structure that would be the new lender to the government of Seychelles. And in exchange for reconfiguring the debt so that it was more payable, they extracted from Seychelles commitments to protect coral reefs and create new protected fisheries zones. There's grant money in this vehicle, and then there are commercial investors buying essentially bonds in the vehicle. So it is blended finance toward conservation. Conservation is really difficult to structure around, so this was a very cool deal. It wasn't gigantic. It was something like $26 million, if memory serves. But they're going to try to do a series of them, and they're going to try to pull that series of transactions and float a blue bond, which would be at scale and would be very powerful. So we write about things like this because we're hoping that they trigger other parties to think, oh, I could use that structure, or wow, I should go talk to those people. We also, under the same heading of field building, knowledge building, hold conferences or workshops on really specific events. So we did one on development impact bonds, where we pulled 50 or so practitioners in, each of whom came into the room with their development impact bond in hand, right? Or their social impact bond. And we talked through at each stage of designing these things, what were the issues they were wrestling with. And we're going to put out a paper with the Brookings Institution about what the lessons have been from that entire class of blended finance transactions. So we're doing all this in the service of reducing the amount of time, the level of effort, and the expense it takes people to do their transactions.
I just got to say, I usually save this until after we're done the interview and we were talking afterwards. But one of the privileges of being the host of this podcast is being able to speak with an expert such as yourself and learning about just the depth of the work that you do. And I got to say, this is really just blowing my mind. I'm looking at the transaction that you're talking about right now, just the small island states, and just wrapping my head around that transaction is it's really fascinating. And you do such a fantastic job of threading that needle and putting it all together and saying, we're actually going to be able to buy back your debt while improving your reefs, and putting that all together. I just wanted to throw that out there and compliment you on being able to put that whole package together.
It is wonderful brain food, my job. And it's a delight to work with people who are that smart and they really want to do something more than pat themselves in the back for a great deal that, got a great return. That whole getting to scale thing in the conservation space, I'll just do a shout out. The Nature Conservancy and Credit Suisse and Cornell University and the IUCN, and I might be forgetting somebody, but they got together. Talk about an interesting mix of people. And they said, we need to stop doing tiny little conservation deals that nobody's ever heard about and that don't change anything. We need to get conservation finance to scale. And they put out a rallying cry, and there's now something called the Coalition for Private Investment in Conservation, which is a really large coalition of just interesting people. It's got World Bank in there. We're a member. The GIN is a member. Some major financial institutions are members, and some charitable foundations and forestry institutions. So when you get that kind of brain power going after something, I really hope just amazing things happen out of that kind of concerted effort. So yeah, this stuff is really complicated, and it takes a lot of imagination. And I feel really privileged that my team and I are sitting there at the cornerstone of it all, watching it all happen and trying to shine more light on all of these people doing these great things.
Is this just super sexy to try and go sell? I mean, you've got some really big institutions down Wall Street, you kind of can wave this out there, or we've got, what is it, several $1 trillion worth of not hidden philanthropic money, but I mean, there's trillions of dollars worth of philanthropic money in the U.S. alone. Is this really super easy to put in the window and say, hey, look at this. This is a great new product. This is super cool. Everybody needs to get on board right now. Or is it, the same kind of hard slog where you got to go out and you're still kind of meeting up with the traditional investor who's kind of like, yeah, I don't get it, or is there something in between? Like what's been your experience?
All of the above. I think there are many, nobody likes change, right? So there are many people in any large institution, for-profit institutions who are like, let's just stick to what we know how to do and just avoid those markets.
Let's go make money. Yeah. Get my retirement fund.
I don't want to deal with, fill in the blank agency. And I should also tell you there's an enormous amount of nervousness in official development agencies and, development banks who do more commercial transactions like the IFCs and the EBRDs of the world. So all is not roses, right? You can do blended finance badly, really easily.
Do you have an example of that? Like one of the fail stories? I always loved the, we fell flat on our face kind of fail stories. Is there something like that you could put on the table for us?
We're at the genesis of recording this experience. I predict in 3 or 4 years we will have case studies of that nature. Let me tell you just very briefly what the concerns are, and then give you, maybe I can forecast in the future what that looks like in an actual deal. So an aid agency, an official development aid agency would say something like, I don't want to put my money into a commercial structure because I'm just subsidizing the fat cats. And if everything goes right, they win. And, heads they win, tails I lose. Why would we do that? And how do I know that it wouldn't have gone forward without our dose of subsidization? That's a really genuine concern. And also they need to measure, if they put the grant out in straightforward, charity form, against if they do this. And sometimes it could be hard to measure the difference in outcomes, right? Then you have the lenders like IFC and EBRD who are trying to price their loans or their equity commercially. And they don't want aid agencies galloping into the same deal and offering soft capital and messing up the market, nor do they have the skills of handling grants. So they've all got concerns as well. And, IFC has just received a commitment of a large dose of capital from IDA, the part of the World Bank that handles the very poorest countries. IDA is putting out $2.5 billion toward calling it the private sector window. Some of that is going to IFC, and the instructions to IFC are use this to really radically change how you deal with certain transactions that you might not have taken on before. So places like IFC are having to learn, what do I do with this stuff? I'm not in the habit of doing deals that are laced with grant money. So they have concerns, the aid agencies have concerns, the private sector has concerns. None of them are used to working together or playing in each other's fields. Coming back to the aid agencies, by the way, they don't have structuring skills. It's different to supervise a contract where a consultant is executing on a grant program than to be a shareholder or be a supervisor of a commercial company and potentially have to monitor that. Let me roll forward to the things we might see in a few years if people do this badly. You might have aid agencies who have no idea that they needed to develop a balance sheet. Now, suddenly they've got a portfolio of assets and not the skill set to manage that portfolio of assets. You could have transactions where you have a fund that has had some tiering of its LP structure, some tiering of its capital. And, so it has a first tier of loss, a first loss taking or risk taking capital from donor institutions and then commercial investors on top. They go out, they do 10 deals. And all 10 of those deals have a lovely development profile. In addition to making money, they actually deliver on the greater good. And then that private equity firm goes to exit one of those deals. It wants to sell to the highest bidder. And the aid agency who fronted the soft capital in the equation says, oh, that has nothing to do with achieving our original objectives. We don't want you to sell to them. So you could have tensions of objectives on exit. You could have a philanthropic company put money into the next Google and then feel really bad when everybody else gets rich.
Yes.
Right? So, and that's probably happened in history. I bet if you go back to DARPA, and if people don't think about things really carefully at the genesis, they're going to end up with some discord in a few years. So I don't have any war stories from the past that I can easily cite. I do, though, see that we need to be doing this very consciously, deliberately, and not throw that concessional capital around without making sure it's additional, that it has objectives tied to it, and that, but for that, the deal would not have gone forward.
So now, rather than looking back, like looking forward, 2, 3, 4 years maybe, how are you going to be measuring the success of Convergence? And is there going to be maybe a fourth line that you got up your sleeve you can tell us about, or what's that immediate future look like?
I am totally open to the offerings of Convergence changing over time. We are brand new. We can, tinker with the model all we like. So who knows structurally, but who cares, right? The real thing is, what are we delivering? We are going to be measuring dollars that went into transactions that had our handprints on them somewhere. So we will track every grant we gave to see if a financial close happened, to see if the development outcome happened. In the investment network, where we are playing a matchmaking role, we will try to track how many of those deals closed. Now, there's no obligation on anybody to trot back to Convergence and report to us, right? So, and there's nothing to say that when a deal closes, it was because it was on our platform. The measurement is a bit sloppy, but okay, let's track what happens with those transactions anyway, to the best of our ability, and report back to the community how many dollars actually went across the threshold in these transactions. So, plain and simple, if you're supposed to be supporting transactions, what happened with those transactions? That's very nuts and bolts. We would be delighted if the notion of blended finance became a household term, so that, you remember PPPs, right? Public-private partnerships.
Absolutely.
That was a buzzword that meant nothing to nobody 20 years or maybe 30 years ago. I'm dating myself now. And now, if you think about what happens when you have a private operation of a power plant or a water distribution network or something, the terms of that deal are really well known. I sort of put it sometimes that when the private sector party and the government utility or the government walk into the room to negotiate that deal, they start on page 20 of the documents, because they already know that there has to be an offtake, there has to be a fuel supply agreement, there has to be an operations and management contract, there has to be an EPC contract, a performance bond. Everybody knows the nuts and bolts of these deals, and you start on page 20 of the negotiations. For Convergence, I would like if blended finance were something that everybody went, oh yeah, I know what that means. And you get right down to the nuts and bolts of negotiating the transaction, because everybody has in their heads a few examples of how these things tend to look. I would like us to be able to start, or our community to be able to start on page 20 of their documents, so to speak.
And that's a great goal, because, something that we, or at least I always try to ask on the podcast about is, sort of maybe not even characterize it like this in this case, but institutionalization, right? I mean, you want to be able to create a process where it's a no-brainer. Everybody is on the same page. Everybody's can come to that table and, as you say, start on page 20 of the contract, because everybody knows the playing field already. And that's a great goal to sort of have for what you're trying to do. And
you know what? We're already seeing some exciting stuff happen. So IFC has just created a new vice presidency for blended finance and partnerships. That's pretty exciting. IIC, which is a private sector wing of the Inter-American Development Bank, the development bank focused on Latin America and the Caribbean, they now have a blended finance lead. You see the OECD putting out information about blended finance. You see the word popping up all over the place. World Economic Forum has their own definition, and they do a lot of information dissemination about the subject. So there might be 10 definitions out there. It doesn't really matter. There is already a start of a community around the practice. And that's pretty exciting.
The last question I have for you relates to what I think probably many people in our audience are thinking about. And, a lot of the people from our audience come from small NGOs, social enterprises, the more traditional sort of nonprofit, community-based kind of looking organizations. How do these organizations get involved with something that you're doing? Right? How do they participate in some of these transactions that Convergence is doing? Or maybe they can't, maybe they don't. Reel that for me.
I think there are an awful lot of fabulous things happening on the small scale. They may not be things that Convergence can support because, as you pointed out, we have 9 or 10 people. And as I pointed out, we're being measured and we're measuring ourselves on moving capital. However, those small stories sometimes have really powerful models behind them. So to the extent that they can get visibility and be used and replicated, they get really important, right? So, they need to get their stories out. One of the things in impact investing that's a very big conversation right now is measurement. And, it's very easy to say that I'm a AAA rated institution in credit terms, but how do you become AAA rated on women's health? So to the extent that these smaller institutions can get extremely good at translating what they've done into numbers and maybe even stories, your word, they are going to have outsized impact. But that measurement has to be there. It's no longer going to be good to say, just have a picture of a kid drinking out of clean water out of a well. You're going to have to say why that particular intervention was really good value for money, why it should be repeated, and how it can be scaled. So I think it's a matter of them getting outsized capabilities and explaining what is so powerful about their models, even at a small scale.
Joan, thank you so much for being on the show today. It's been a true education for me, really fascinating conversation, especially about a topic that I don't think so many people get to really sink their teeth into a whole lot. And I really appreciate you taking the time to come here, and I hope it's not the last time that we're speaking.
Thank you so much. Like I said, I have a fabulous job, and I work with fabulous people to bring light to some just great stuff that's happening out there. So I've really enjoyed our talk. And if anybody wants to do so, please go to our website, convergence.finance. Look up our investment network, which again is going live today. Look up our design funding grant program, and look up our resources. And you can register as an individual. You can register if you qualify as an institution and get deeper into the website behind the regulatory paywall. There's no actual pay. So I invite your listeners to take a tour through our site. You can also follow us on Twitter. We'd love to hear from you.
Hey guys, thanks for listening to the show. If you found value in my conversation with Joan, take the time to support the podcast. Hit subscribe so that you never miss an episode. Share it on Twitter, Facebook, whatever you like. But also, head over to iTunes or Stitcher or SoundCloud or whatever you're using right now. Give us a review. If you don't like it, give us 1 star. But if you do like it, throw us a 5-star. We really appreciate it. Thanks. You've been listening to the Terms of Reference podcast from 8preneur.com. Subscribe to us on iTunes.